Hello everybody and welcome to the weekend market update for the week starting December 12th. So this is what we've got coming up in today's video. We're going to look at earnings as we always do. We're going to look at some economic reports that are coming out this week. There's a lot of them and they are really important, as you can see, especially looking at CPI and FOMC. Global catalysts, not a lot. Maybe, the China-Saudi Arabia thing could be a bit of a catalyst for next week, perhaps. But I think, obviously the big catalysts, even though these are U.S. events, the CPI and FOMC, they will reverberate around the world. So that's why I put C above there for the global catalysts. The markets are at an important support level, or you could even call it an inflection level. Above this support level, we want to be long. Below it, we want to be short. I'm just going to call this week binary. I think we're going to be much higher or much lower by the end of the week. So we'll take a look at that. We'll look at some of last week's setups that are still kind of actually, we're not going to look at Google, I don't think. We'll look at some of the setups from last week. We'll see if there's any new setups this week. It's pretty slim pickings, and I'm not really thrilled about taking anything anyway, at the beginning of the week at least. I want to see how CPI and FOMC plays out before I really put any more risk on. If anything, I've been de-risking for a little bit now. We'll talk a little bit about that as well. So why don't you go ahead and smash that like button for me if you would, and we will really quickly go over our disclaimer. Oops, there we go. Everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All trading and investment decisions are your own and done at your own risk. Earnings this week, pretty slim pickings, as you might expect, as we're coming in, to the end of earnings season. Monday after the close, Oracle is a biggie. And Coupa. Coupa's a software company that you guys might have heard of. It makes some nice moves on earnings, so that one might be worth watching. Not really anything going on Tuesday. I don't recognize any of these names really. On Wednesday, we have Lennar, one of the home builders. We have Trip.com, give us an idea of how things are going in travel. And we have CleanSpark, solar company. So that's Wednesday. On Thursday after the close, we have Adobe. And on Friday before the open, Accenture, bit of a boring company, but a big company nonetheless, but unlikely to move markets. Let's see. So our economic calendar, this is where things get important, right? On Monday, we have the federal budget balance. I doubt anybody's going to be paying much attention to that, especially with CPI coming the next day. So on Tuesday, obviously, it's all about CPI. The consumer price index. While the Fed doesn't, Jay Powell says the Fed doesn't really look at this so much, the markets sure do, and the media sure does. They'll be looking at the year-on-year change on this. Obviously, we want to see this number coming down. Markets have had a rough time since Powell sort of got dovish, or turned slightly dovish. And suggested that we'd be looking at a 50 basis point rate hike on Wednesday. Since that, we've had some reports come in hotter than expected. Jobs reports came in hotter than expected. Producer price index came in hotter than expected. We're seeing some sort of mixed results here. Did this turn down in our inflation measures? Was it just really temporary? Is it only gonna last a month, or will it continue? And we'll get a hint of that on Tuesday with CPI. And then obviously Wednesday is the FOMC meeting. What are they going to do with rates? Is it going to be 75 basis points? Is it going to be 50 basis points? Market is pricing in 50 basis points. But there's also a lot of fear in the market. It's almost a sure thing there's going to be 50 basis points this time around. But are they going to be kind of hawkish? Is Jay Powell going to be hawkish and say, hey, maybe we're going to extend rates out for longer? They're going to be a little less each time now, but we're going to be, raising them for longer than we expected. They can be dovish in only doing a 50 basis point rate hike. I can't believe I'm saying that's dovish, but compared to all the 75s we've been getting, that is dovish. But they can be hawkish in their statement. And Jay Powell certainly can be hawkish in his press conference. So there's a lot riding on this week. Like I said, big binary event. And the market's going to move one way or the other, and it's probably going to move a lot. On Thursday we have, if all that wasn't enough, on Thursday we have retail sales. Again, another really important number that the market will be watching closely. Hopefully it confirms whatever the Fed does and Powell says the day before. And as always on Thursday we have unemployment claims. On Friday we have another important number, the Flash Services PMI, Flash Services Purchasing Managers Index. And services is where a lot of our continued inflation is coming from. We're seeing a decrease. Obviously, we've seen a decrease in energy prices. We're seeing a decrease in the housing market, and should be seeing a decrease in pricing in the rental market, or at least maybe not a decrease in the rental market, but a slowing of the increases in the rental market. There's a lot of areas of the economy we are seeing either a decrease or slowing of the increase in prices. But services is an area where inflation seems to be persistent, and that's mostly because of the tight job market there. So this will be interesting to see how this looks on Friday. Does it confirm what the Fed says on Wednesday? Does it confirm what we see on CPI on Tuesday? So every day this week except Monday, really important. Let's move on now and take a look at our markets. All right, so we're looking at a chart of SPY representing the S&P 500. You can see in the big bold line here at the top is our downtrend line. We have now failed there. We'll count this failure as 1, 2, 3. This is now the fourth time we have failed at that level. Now, we haven't failed completely yet. And again, this sort of adds to the binary nature of what's going on this week, right? This looks somewhat similar to what went on here. And, every time we have failed there, we've made big moves down over the next couple of months. It's yet to be seen if that happens again. We did have, though, a slowing of momentum, especially the momentum from that move. This last time was a little bit lighter on the way down, and if this is going to prove, this last move, if this is going to prove to be anything more than just another bear market rally, we really need to turn around here and go back up and get through this trend line and get through this important resistance level right here and get through that declining 200-day moving average. We did try and get through it, but again, failed at that trend line. This is kind of, there's a real opportunity this week for the market to kind of shrug off this little move down, move down from the trend line and go up and break through it. It's not looking great because, as you can see, I've marked this out here. And what is that? Well, that's a bear flag, and it is right at the 100-day moving average. So we've got the 100-day moving average acting as support, but we've got this bear flag, and this bear flag suggests a move down to 380 or a little lower, probably 375 on the SPY, should it break. And if it breaks, it's going to break because the CPI or the FOMC was bad. So we can easily see from here, a 15 to 20 point drop. And that takes us 380 to 375, maybe even 370. 370, I think, would be an overextension. We'd probably get a little bounce from there. So, it's kind of tough to be bullish right now, except that we've got these unknowns coming. The market is thinking they know what's going to happen, and the market doesn't like what they think is going to happen, but you never know. So that's why, this is very binary. Anybody who tells you which way it's going to go from here, they don't know. They're just trying to get clicks or whatever. This is almost a coin flip. As I've just done, I can make bullish case and I can make a bearish case. So, Qs are going to look almost identical to this. They didn't get to their downtrend line before turning around. They didn't even get to their major resistance line, but they did get, they stalled out at their 100-day moving average rather than the 200-day moving average, but they are drawing a bear flag in an important area, and, that bear flag portends, suggests, I should say, rather than predicts, suggests a move down into the 265 to 270 area on the Qs. IWM is weaker. These are the small caps, and that that indicates how level of risk off, and we were quite risk off over the past week and a half for IWM. We kind of closed just below a minor support level and right on or just above the 50-day moving average. There's not a lot of bullishness to see here. You could almost argue that you've broken down through a bear flag. It's tough to call this a bear flag here. Not looking great there. And, if we do have a breakdown on FOMC, it's likely that IWM and the Qs will be duking it out to see which is the weakest index. But obviously this 169 area is a place we should be looking for support if it breaks down. And then 188 is resistance on the upside if we can get through even these trend lines, downtrend line, and the 200-day moving average. I think getting through, this downtrend line and the 200-day moving average is pretty easy if CPI and the Fed coming good for the market. This 189 to 188 to 189 resistance level might be a little tougher. Let's look at the volatility index. As you might expect, volatility has come back up. Had a nice break below 20, but that didn't last long, and it's been moving up, and now has drawn a bull flag, of course, right? So the expectation there is volatility continues higher, and that means the markets are going down. Let's look at TNX, the 10-year yield. Oh, I should mention also on Monday there is the 10-year bond auction. So that will be important for the 10-year yield. Interestingly, as weak as the markets have been and suggest they're going to be, we haven't seen the 10-year yield really bouncing hard. I mean, we had a decent bounce on Friday, but we've kind of broke down through a support level here, and it's trying to make its way back up. It's not looking especially strong, and I think that it's sort of suggesting we see continued downside in the yield. I mean, we're definitely in a short-term downtrend here on the 10-year yield. So that does not suggest the markets fall apart. Let's take a look at the dollar index. The dollar index, we've had a series of kind of moves down, consolidations, bear flags. We've broke through recently the 200-day moving average. And we're consolidating below it, creating another bear flag. Again, this does not suggest a breakdown in equity markets. Let's take a look at, while we're here, yes, we should look at our dollar cost averaging system. Now, in the SPY, it is still green, but just barely. You can see we're about to go below the 20-week moving average. The MACD is going to be a while before it crosses over. But the system will turn red. The system will turn off if we cross below, if we are below next week, the 20-week moving average. The Qs, if you remember last week, turned on, and that, well, only lasted for a week. We are back down below the 20-week moving average. You know, it was looking pretty fragile there last week. Anyway, IWM has also now turned off on the move down below its 20-week moving average. But again, the MACD is going to be a couple more weeks before that crosses over. But this, you know, for now, at least the beginning of the week, it seems really good to be hands off. And, you know, if this is, you know, if the early part of this next week is part of your schedule of dollar cost averaging in any of these indices, I would just hold off for now. Okay, what else do we want to look at here? You know what? So let's take a look at. I'll quickly go through some breadth here. This is stocks above the 50-day moving average. Let's actually, you know what? We usually look at this over here, don't we? Okay. Stocks above the 50-day moving average. You can see that this is pulling back a little bit, rolling over a little bit, not looking terrible just yet, and managed to hold up there for a little while. And most of the times it's been up, or it has come up, made a nice move up, it is immediately turned around. Not this last time, so that's interesting. We've got the percentage of all stocks above the 200-day moving average. Same sort of idea here, right? It held up here for a little bit this time, rather than, you can see the last time it made a nice move up, it immediately turned around. And we can see that that's sort of been the pattern for a while. This is slightly different behavior here. So this suggests that, hey, you know, maybe it's not all bad news. And we've got S&P 500 stocks above their 50-day moving, or above their 200-day moving average. And again, didn't turn immediately, and you know, isn't falling as quickly as it maybe could. Of course, that could, you know, this could look totally different by next week if the markets do break down and we come down below this all-important 50 level. You know, we could see a really quick decline in this. All right, let's look at. Let's move over to gold. We've seen a really nice move in gold over the last month or so. And it had, you know, last weekend we were talking about this big move. Now it's consolidated sideways. This uptrend line is holding, and it's holding. You know, it did fall down and kind of fell below that important 1800 level, but moved back up through the week and closed above the 1800 level. It's probably coming to a little bit of resistance here around 1820, but this looks like it wants to continue moving up. Again, this is going to be kind of binary with CPI and the Fed. The miners not looking quite as strong, of course. I wouldn't really, you know, if I was going to play gold, I would actually want to play the metal itself. So, you know, either the futures, GLD is a gold ETF that is very popular. I wouldn't really want to play with the miners right now, you know, just because the market is so indecisive at the moment. And stocks, you know, have been weak for the last week. Of course, that could change overnight. Silver. I really like the what's happened in silver here. I think that no matter what happens with gold, I kind of feel like silver is going to go higher, and I did take on a small position in a silver ETF, SLV. And you know, I am currently quite happy in that position. What else? Copper. Copper may be presenting an opportunity. I think copper, you know, kind of depends on, again, you know, with CPI and the Fed this week. But also importantly for copper is China. How is the reopening process going in China? And how are things going for the Chinese consumer? Now you can see copper is right at a declining 200-day moving average and coming into an important pivot. I'd like to see this go sideways for a few days, you know, maybe past the Fed or until the Fed and then break out of there. But there, I kind of think there's going to be a play here. So one way to play this, because you probably don't want to play the futures, is COPX. Now, COPX is the copper miners, and for the same reason I don't want to play with GDX, the gold miners, I don't really want to play with the copper miners, although this is definitely looking stronger to me than GDX, right? You can see we're above the 200-day moving average. Interestingly, copper futures are not above their 200-day moving average. I don't think, were they? Let me double check that. Don't want to misspeak there. Yeah, it was right below, that's right. So they're above their 200-day moving average, consolidating right here. They've made a little resistance level. And again, a couple more days of consolidation here and then a breakout would be cool. But I'm not thrilled about playing in any of the equities, right before the Fed and everything, with everything we've got going on this week. If I was going to play this early in the week, I would probably play it with CEPR, which is a ETF that tracks the futures on the commodity. So this tracks the futures on copper itself. And you can see that, we're the same thing here. We're kind of waiting for that breakout above the 200-day moving average. All right, let's move on. Our general commodities ETF. Even with all these metals moving up nicely like they have been, this is getting hurt by oil. We've broken through a really important support level, and we're going to be looking for where's the next support on this. We've got to draw a new line in here. So let's probably off of this area here, maybe that pivot there. I kind of like somewhere in there, kind of like that. 22.30 to 22, probably 40. All right, that'll be our next area of support. It comes down to there. Barring anything, I haven't seen any news on oil come out over the weekend. This is going to need some sort of catalyst to turn it around. Things are not looking good in the energy and oil space right now, as we'll see as we move on through some of the ETFs. Let's take a look at natural gas. That had a very strong pullback and has started to bounce. I think this pullback was on decent weather and this bounce is on bad weather. Natural gas is just so weather dependent. XLE, the general sort of energy ETF, and you can see this has really rolled over and has started to accelerate to the downside. It's at an important support level right now, just above that 100-day moving average. Doesn't look good though. I mean, it's got some serious downside momentum. Barring a nice move in the commodity itself or a change in the sentiment towards equities, this is going lower and looks to come down and fill this gap and move all the way down to 76. Now, I've been warning on this for a number of weeks now and mentioning that I've been trimming positions in energy, looking or waiting for what might be a turn. Longer term, I'm still really bullish on energy, but we're having what's looking like a serious pullback here. And I think that, if you're not out of the way by now, I think you really need to be. I'm left, any of my energy plays now are down to taster positions, just to keep me, aware of what's going on and to have a place to rebuild from in my, for the longer term. Because I do think a turn is coming here, but I'm not sure where, and I think we've got more downside first. Now you can see that XOP has been quite weak, a lot weaker than XLE, and looks to continue to the downside. I'd be surprised that it doesn't, even though it stopped here on Friday, unless there's some sort of change, there's some catalyst over the weekend. I think we're filling this gap. And we may be even coming all the way down to 120 here fairly quickly. And OIH has also rolled over and has really good momentum to the downside. And not really seeing any support in this till this comes into the 200-day moving average, maybe the 100-day, or down here on this, this is a really minor support level here in around 250 to 252. So again, not great in the energy sector, and it's affecting solar as well. You can see that, we had this beautiful bull flag here, or pennant, tried to break out of it, basically failed a retest of the, got messy in here, and now it's breaking down, and we've got a nice bear flag. Let's look at FSLR, because that's one of the ones we monitor closely here, and you can see that that has rolled over from all-time highs. Has a little bit of momentum to the downside. Will it find support at the 50-day moving average, which is also this pivot, interestingly? We've got to mark this level in here. This is actually going to be, I think this could be an important level in this stock. And we may want to extend that consolidation across as well. These are levels that might come into play. See the 50-day moving average, and here, we should find support here. Now, if it finds support here, does that turn into a bear flag? Or does it, make a V? Does it instantly bounce off of that? You have to say, those are a couple of the possibilities on that one. End phase is still kind of hanging in. If it pops up here. We've had this bit of a consolidation, but there is still the upward trend here, and of course the long-term upward trend. And it had a decent bounce after this bit of a pullback. Now, this is a really minor looking bear flag. I wouldn't pay much attention to that. I'd pay more attention that it's trying to bounce off its 21-day moving average. If we can get back above this resistance level, I think things are looking pretty good for end phase. However, if you're in this, and even if you have kind of a longer term position in this, I think if you haven't taken some profit already, taken a small piece, a quarter to maybe no more than a half of your position off of this, you really need to be locking in some profit here right now. With everything we're seeing, all this bearishness we're seeing in energy and in equities in general, you've got an excellent opportunity to lock some profit in. I really think you should, although this is not investment advice. You've got to make these decisions for yourself. And I'm not saying you need to exit the entire position. I mean, you're still up near highs. Things are still looking pretty good, although, what we're seeing here is risk is coming in. And when risk is coming in and you're very near all-time highs, you got to be taking some profit. All right, let's move on here into the other sectors, and we're going to look at consumer discretionary. Not looking ideal here. This was breaking through. Actually, I'm going to get rid of all these trend lines. They're just not working, because really what's happening, it's actually giving a false sense of what's happening. What's really happening is we are consolidating. We're coming up into this resistance level, and we're turning around and coming back down. And we are, trying to put in higher lows. It's almost wedging a little bit. You can see that we have a little bit of a downtrend line. A little bit of a downtrend line is forming here. And, is this now, are we forming a declining wedge, or, a bit of a declining triangle here? Maybe, we'll see how this does here. But, we've got a number of support levels, and this formation, it can be a fairly wide consolidation. It looks like the consolidation is trying to narrow, and that in itself is kind of bullish here. We expect a lot of these stocks and especially in this sector, because it's one of the weakest in technology and in communications, we expect these to put in a long bottom formation, at the end of a bear market, a protracted bear market like we're in. So this kind of price action isn't terribly surprising. But you can see in the very short term, we've got that 3-day bear flag like we've seen in the indices. And that would suggest a move, down to this pivot or maybe even lower, which we definitely don't want to see. We do not want to break this 133 level. All right, let's look at our industrials. So these, had been consolidating nicely in here. Thought we'd get a decent breakout. It did break out. We've broken the steep uptrend. Shouldn't really surprise us. Is this forming a head and shoulders here? Kind of hope not. And it's a little one. And this shoulder here, I don't know, doesn't look like anything like that shoulder, or maybe even, if you called all this a shoulder. So I don't know. I'm gonna say the jury's out on that. If you want to be bearish on industrials, go ahead, call that head and shoulders. Head and shoulders top. I don't think it's quite ready yet. But it's not totally bullish in here either, is it? We do have some support. We've got 21-day support there, but there's a lot of air. There's a lot of dead air here where we could roll over quite quickly. Financials. Again, some may be looking at this and thinking that this is the beginning of a head and shoulders pattern, but it's kind of like, and again, same with industrials, right? It really needs to come up and make a proper shoulder on the other side of this before we can really call it a head and shoulders top. We should find support here at this 200-day moving average. But again, this is kind of what's going on here is slightly bearish, although if it was a bear flag, it's declining, and that suggests that it will fail and move to the upside. But it's really kind of uncertain, with this price action in here. XLK technology. We had, we had a nice little up channel going on here. We're still in that, but it is weakening in my opinion. But if we can see a bounce here, it tried to get through this downtrend line that we had drawn. And it came back into it. On Friday, it tagged that line again and, pulled back from it. Again, really indecisive what's going on here. Really kind of binary from here, I think. A move to the upside is a big move. A move to the downside is a big move. Just like with our markets and what our macro suggests is going to happen this week. XLC, the communications sector, again showing that sort of binary nature, showing a bear flag, but showing it could be a big move either way. Let's take a look at some of our FAANG stocks. This is Meta. Its move up seems to be failing. And perhaps drawing a little bit of a bull or a bear flag here. Little tight consolidation. This sort of, that it's down at the lower part of this formation does suggest a move to the downside. But again, I think any move out of here is going to be a big move. Let's take a look at Apple. It just continues to be messy, chopping around. But this does seem to be setting up a little bit of a support level here. I'll just draw that in for you guys. Do have some support here in around 140. A move below that probably be a big move. 134 is kind of a no-brainer, maybe even all the way down to 130 here. This pivot that goes way back into June. We don't want to be testing this stuff. We don't want to be testing all these lows here. Amazon, speaking of not wanting to test lows, come on Amazon, let's get it together. This does not look good for anything, right? We were looking at this potential upward channel that was setting up here, and what do we get out of that? We get a failure out of the channel, and we get a bear flag. Don't like what I'm seeing here, especially right above this important pivot, the support level right here. Break lower, where do we go? Next stop for Amazon, 73 maybe? maybe 79. Yeah, I really don't like what I'm seeing on Amazon. Jay Powell's got to come save this. Bad CPI, bad Fed. This is making a big move to the downside, in my opinion. Netflix, really interesting action out of Netflix this week. I think there was a analyst upgrade on Friday. It gapped up so much I didn't pay much attention to it because it wasn't going to chase that gap. I maybe should have been shorting that actually, because look where it went. I've had these lines drawn on here forever, and it went right up there and turned around. Went to the top of the wedge, turned around and got right up into the target zone out of our gap fill. Lots of reasons for that to move down from here, but again, could be kind of binary. Does it come back and fill this new gap? Probably should draw in the new gap. I mean, everything on this chart suggests that yes, it is going to move lower. It's going to fill this gap and then come down and test this, the bottom of the wedge. And with these wedges, we expect them to ultimately break out to the downside of a rising wedge. I'm sure the shorts were having a field day with this one. Google. So, we had been watching this. We had been looking at this bull flag. We looked at the breakout of this bull flag, and it started to form another bull flag and thought that it would break out to the upside of that, and that failed. And it is coming down, and it looks like it's coming down to the top of this gap. Now, does the top of that gap have support, or does it break down into it? Again, another one of these binary events setting up here, right? It could bounce, and it would probably be a decent move. It could break down into this gap, and that would probably be a decent move to the downside. Very binary. Microsoft. You're going to see a little bit of a bear flag here. That tells us it wants to move lower. Tesla rolled over this week. Had a nice bounce on Friday. Some people will call this a double bottom. That is unconfirmed as of yet. I think more important is what happens when we get to this downtrend line. What happens if we get to resistance here at 186.63, and that is also exactly where this declining 21-day moving average is. Everything here suggests this is going to break to the downside and probably break this support level. That's an important level setting up here, because you can see there's kind of some dead air here. That breaks, breaks below here, this 167 level. This thing is going lower, and probably fairly quickly. All right, what else we got? Semiconductors. These continue to be messy, but are hanging in their consolidation, hanging in above that downtrend line, hanging in above the uptrend line. But below the 200-day moving average, above the 21-day, it's just all, where does it go from here? It looks like it should do something, and it kind of looks like it's not going to do anything at all. It sort of looks like it's going to go sideways, but if it does do something, it's probably going to be big. All right, let's look at XLV, healthcare. This is, made a really nice move up, pulled back, no big deal, moved up again and couldn't get through, and then had a big red day. So that's not ideal. This kind of looks like it may pull back even further. We can draw a sort of, we should draw an uptrend line in this. I would draw that line here. I think, we're looking in the short term here and seeing where this should find support, and it should find support here. But this big red candle says, not finding support there. Let's look and see what happens at the 21-day moving average or this support level here. There is lots of support below, and it's had a nice run, so, it just looks like it needs a bit of a bigger pullback. And XBI, the biotechs. they this time now, on this move up and bounce off the bottom of this channel that they've been in for quite some time, didn't get up to the top of the channel. Got up to this sort of previous resistance and turned around, and now look what's going on here. It had a bit of a bear flag, minor bear flag, right at the bottom of its channel, and then broke down through this on Friday. This does not look good here for biotechs. So if you're in this, be really careful. I kind of think, this could move quickly to the downside. There's really not a lot of support. I mean, you've got sort of minor support levels. This one right here at 76 might be half decent. But, it could start cracking through these quickly if it gets some momentum to the downside. So, yeah, be careful if you're in it. Let's look at our defensive sectors. We'll start with REITs. You can see they failed to hold their uptrend line, but have been going sideways and getting support on the 21-day moving average. XLP, the consumer staples, broke through its uptrend line. This is a fairly steep trend. It's had a really nice run, so not surprising to see it take a break. This is pretty, if it can just go sideways from here, that's pretty healthy. And XLU utilities. This one, same sort of idea, right? Had a nice move up, fairly steep uptrend line, going sideways now, taking a bit of a break, wrapping itself in around at some of these longer term moving averages. All right, so some of the setups from last week. DraftKings. Now, obviously, we've been watching closely what happens when it hits the 200-day moving average and that downtrend line, and every time it retreats. When it hit here, it didn't retreat very much, and when it hit again recently, when was that, about a week ago from Friday? Yeah. Hit there, retreated, had a fairly quick move down, but again, it looks like it's trying to make a move back up into that area. Hasn't completely rolled over yet. So, is this trying to make a move up from here? Is it trying to say, no, I'm done with this downtrend, I want to start moving up? And it could be, but I think that we're going to have to see some sideways consolidation in here for a while for this thing to really move up. It doesn't seem like it's going to break through and move up suddenly. Too many people been punished too many times trying to buy breakouts on this. So I don't trust anything that goes on in this stock. ISRG is one that we've been keeping an eye on for a while now. And some of you, I played a breakout here. I got really skittish on it really quickly and bailed. And glad I did. But it did kind of turn. I use a different workspace here than on my own personal charts that I trade from. And I had, after it broke out, I'd also drawn a line right in there. And sure enough, it did bounce off that line. I really thought about, if it hits that line, am I going to play it? And I almost played it again. I wish I had, because this is the day right here it did, and then it gapped up the next day, and then I wasn't going to buy that gap. And it's just looking a little soft in here. But I think that, if this can come up and perhaps break through that pivot right there, there might be a play there. I think that you have to be really nimble in this one. It's not really making big moves right now. It's just being a little bit choppy. But I still think it's kind of worth keeping an eye on because it's outperforming the market, obviously. And it's not really these moves. The pullback is small. I think we just, we got to look for a setup. And I think a few more days in this area, maybe that's the setup. OKTA is another one we've been watching. This one had a big gap up on earnings. went up very nearly to its previous gap from earnings. And we talked last weekend about how maybe it draws a bull flag in here, maybe it consolidates in there for a little bit, and it pretty much is consolidating in that area, right? Let's move this line down a little bit to catch the lows of that. So I think, to be able to play this now, obviously we're coming up into resistance, coming up to the declining 100-day moving average and the gap and everything. I think what we really want to see here to make this playable is, a consolidation right there for a week or so. And then, nice and tight up in here. And then a breakout from that, what I think would be awesome. So that's what I'd like to see there. Who knows what happens. Now, really only one new setup, and it's a short side setup. I'm not like a lot of there were stocks. A lot of setups got broken over the last week, and then we're starting to set up again, and then got broken again on Friday, especially at the close. That close on Friday was ugly. But there's a really indecisive market with a lot of stuff going on. Actually, we should take a look and show you what I mean by that close on Friday was ugly. I meant to actually show you that when we were looking at the indices. We were okay on Friday, and then we just, in the last half hour, just fell off a cliff, right? And, even went through our openings, went through the pre-market low, and closed below that. That's not ideal. That does not bode well for Monday. However, with everything that's going on next week, it's not a surprise that people were kind of skittish about holding, and probably we're seeing traders getting short, and we're seeing anybody, with longs. Once that started to break to the downside, it's not a surprise that it gained some momentum. So, if we didn't have the events coming up this week that we did, I would be really sketched out by this. But because we've got big events coming this week, not terribly surprising to see people take risk off last minute. All right, so let's go back to run. Now, what was that big green bar at the end there? That's interesting. I'm not sure what to make of that. That's interesting. It makes this setup that we're seeing a little bit less bearish. But even so, I'm still bearish on the setup on the daily. But one of the things I was going to say is, I'm with everything we've got coming up, I don't want to take plays either way. There's it's sort of like you don't have time, and everything is so binary. Do you take the downside play out of this? If the CPI comes in really nice and the market rallies like crazy, well, even Sunrun here is probably going to rally. So it's a risky play to take this, before midweek. If we start to see this continue to go sideways and then break down with CPI or something, well, this is one that I would either CPI or FOMC. This might be a really good play, to take on that, because I think we could see a lot of downside here out of this. And I wouldn't be surprised if the market is pulling back hard. I wouldn't be surprised to see this in the 22 to 2150 area, by the end of the week. So that's it. It's like we've been talking about. There's it's really binary going into the middle of the week with all these macro events, and we're probably either going to be a lot higher or a lot lower by the end of the week. So let's see what we've got coming up on our calendar this week. Okay, all right. So we've got a ticker talk on Wednesday, as we usually do. Our day trading roundtable was a lot of fun. We had really enjoyed that. We had some really good discussions there. Back to our regularly scheduled Wednesdays with ticker talk. Next week, I will not be able to do a weekend briefing. I am moving on this day, and there's not a chance I'll be able to get this done. And I'm pretty sure I'll be able to do our ticker talk on Wednesday the 21st. But there's a bit of a tiny question mark here. I mean, I want to be back up and running and trading again on Monday the 19th, but that's a little up in the air. I should have, all my internet should be turned back on by the end of Sunday. Hope to have this rig, my trading rig, all set up and everything again by the end of Sunday. But again, moving, all kinds of sketchy things can happen when you move. So that's where we are coming up for the next week. Sorry about you won't see me next weekend, but I'll be back. Will I be doing a market briefing? Yeah, you know what? Actually, I'm not doing family thing until Boxing Day, so I can probably do the market briefing, the weekend briefing on Christmas Day for you. All right. Thanks, everybody. Enjoy the rest of your weekend. And again, be careful next week. Maybe hands off the first part of the week. Maybe, even take a little bit of risk off if you got too much risk on. And, let's hope for a friendly CPI and a friendly and happy JPAL. Thanks, everybody.